Thank you all for gathering for the Asset and Investment Review Task Force meeting. This is our last meeting. I know there's a lot of sadness with that, and we're just grateful for the dedication everybody has put in helping us through this process. Let's see, what show
we do introductions first.
Yeah,
each other, but
all right, yeah, let's start with introductions. My name is Marlo Oakes. I'm treasurer and chair of the task force. Let's just go around here and then we'll grab people online. So Kurt.
Yeah, Kurt Slod, Chief Deputy State Treasurer. Dan Gardner, Chief Examiner, Department of Financial Institutions.
Kevin Stratton, Utah Senate.
Todd Auger, Business Administrator, Granite School District.
Jason Allen, Utah State Auditor's Office.
Brittany Griffin, Treasurer's Office.
And online.
Howard
Headley, Utah Bankers.
Rusty
Rusty, Utah's Credit Unions.
Grand
Grand Bidder with the Utah Association of Special Districts.
Kim
Jackson, Utah County Treasurer.
Matt.
Good morning, everybody. Matt Dugdale with Stiefel Nicholas.
Billy
Westerman, Utah Taxpayers Association.
Cinna Peterson.
Val Peterson, Utah House of Representatives.
Brooke
McCarrick, Utah Attorney General's Office.
Jonathan
Ward, Zions Public Finance.
and Alex just walked in.
Hey, great. And Alex, you are with the auditor's office, data analyst extraordinaire. And yeah, thank you everybody for joining. So we'll start first with actually, I guess we can't really go into that one yet, right?
Yes, we'll need to flip the agenda.
Yeah.
We need to approve minutes.
Oh, we do. Oh, okay. Yep. And I assume that those minutes were sent out.
Those were sent out yesterday.
Oh, okay. All right. So the first item is to approve minutes from our November 3rd meeting. Any discussion on the minutes? Hearing none, I will entertain a motion.
To approve the minutes.
Thank you, Daniel. Do I have a second?
Second. LeGrand.
Thank you, LeGrand. Any discussion on the motion? Hearing none, all in favor say aye. Aye.
Aye.
And any opposed? All right, that motion passed unanimously. Thank you. Welcome. Let's see. All right, so we're going to start now with the final report.
I'll share my screen.
Yeah,
maybe
that'd
that'd
be great.
be the easiest way.
Yeah.
This is still in very draft versions. We welcome your feedback. We have until the 30th to submit this. So we'll take feedback from today, but then also if you have feedback, take it into early next week.
Yeah.
Probably the sooner the better, but
Trying to avoid Thanksgiving. Everything's leading into Thanksgiving. So what should we set a deadline?
yes,
Maybe on Tuesday
Tuesday noon
for feedback. Does that work? Okay. All right, that sounds great. I just wanted to reiterate something, and it's in the executive summary in the beginning of the report. There's been a lot of interest in the Public Treasurer's Investment Fund for, there's a lot of money in there. And so there's been a lot of interest in using public money to provide positive economic benefits to the state. So what was it, last year or a couple of years ago with the housing?
Yeah.
So legislation to help finance housing. Initially it was a discussion around the PTIF. And so I want to just provide a little bit of background on the PTIF. We have over 750 public entities across the state that are investors in the PTIF, and they invest looking for yield and safety and preservation of capital. But they're all different. So you have universities, you have the state, you have various state agencies, you have various municipalities and, educational institutions. So very different profile, but they all are public. And because it's not a separate account for one entity, it is a commingled investment vehicle. And so as the treasurer, I have a fiduciary obligation to manage that money in the best interest of all of the beneficiaries, essentially to fulfill that fiduciary obligation. We have a very narrow focus on how we can manage that money. So when it came to the housing discussion, it started with the PTIF, but that was because the discussion didn't start with the treasurer's office. When we were pulled in, we were able to help guide that to the state, because the state could peel off a portion of money, segregate it, essentially take it out of the PTIF and determine how that money could be utilized. And that's really what we're talking about with this exercise. We would need to find a pool of assets that is willing and interested, and most likely it would be the state, to take a portion of their money that is in the PTIF and do something with that money that is different than what we're doing with the PTIF. So anyway, did you want to add anything, Bert?
No, I mean, that just ensures the integrity of the PTIF, and which isn't to mean we can't take reserves of the state and aim them towards a different purpose, right? But the minute we go and try and use the PTIF, then it opens us up to having our local governments feeling like we're compromised, and we worry that that might end up making them want to divest and use other investment institutions that can invest their money just like the PTIF, that are in the private sector, that are qualified to do so within the state. And so we would never want to undo the great economies of scale that our public entities enjoy by having the PTIF, and push them away, by inadvertent actions that we do.
That, and I think more importantly, violate our fiduciary duty in doing and for managing money for others, not just the state.
Right. Yeah. So I just hoping just hoping that people could understand our mandate that we're operating under, and like I said, it's not that we can't figure out ways to accomplish things, but it typically is with state money, because the state may have an interest in things like housing or, supporting financial institutions and that sort of thing. So anyway, please.
Marlo, are we talking about like how we got here, or are we talking about what we're doing here?
Well, so we're talking, I think we're talking, from my perspective, we're talking about what can we do from here? In other words,
okay,
I would not want to,
I don't think this has anything to do with the PTIF. And I don't think we want to change anything that you're doing a great job, and the PTIF is doing what it's supposed to do.
Yeah.
What we're talking about, I think, in this task force and what the report showed is what is the obligation of those entities who are collecting taxes and reserving taxpayer money to do with that?
Mhm.
And the report clearly showed a much higher return to the state and to the taxpayers if it's invested in Utah.
Yeah, and I think we have to be careful with that, only because that's a theoretical framework. It hasn't actually
No,
been proven. And so what we need to do is be able to prove that through empirical analysis, because that's never been done.
no,
The
but
analysis.
what hasn't? Yeah. Okay. Well, I disagree with that. I mean, I think the report disagrees with that. What the report said is if it is invested and multiplied locally, this return is significant. What hasn't been proven and tracked is okay, if we deposit it in a local bank, can we assure that that local bank or credit union is going to lend it out here? And then if it's lent out here, that those deposits are used to hire people here, those people pay taxes here. Again, that's all not proved. But to the extent that that happens, the return to the state is significantly higher than what the PTIF is yielding. And
Yeah, yeah, and so it's a matter of can we show that empirically? What does that look like, right, for the state? If we can track that in some way, and I think there,
and that, but my point being is that is not an obligation of the PTIF. It's not that we're not
right,
talking about that. It's an obligation of entities that are authorized to collect taxes in the state.
mm,
That would include the state, it would include all the local entities on this call, uh, that they have an obligation to reinvest their reserves in the state of Utah, or at least a portion of those in the state. That would be the policy that we would establish as a legislature, as a task force to the legislature. And
yeah,
if we could somehow assure that those excess reserves, however defined in the report, are invested in Utah, that's a better deal for taxpayers and for the state of Utah than chasing yield through whatever diversified investment, you know, plan that the PTIF so capably performs.
yeah, and I
I
think,
don't
you know,
know.
and I think that the challenge is how do we need to be able to show what that looks like, right? Yeah, go ahead.
I was saying, maybe if I'm understanding, maybe the conflict here is just that we need to be able to find a way, if we're gonna invest in a Utah-based bank, that's going to result in a loan in
Right,
Utah.
right.
I think, is that?
Yeah, yes, and so if we have to be very careful in crafting policy that is based on a theory that is strong, but we don't know once that money is in that institution whether it is actually going toward accomplishing the goals that we're expecting it to accomplish. We don't have that data today, and we don't have an ability to, I guess, look at compliance to that end goal, right? And so, and so that's part of the work and the final paper that TUR Partners and University of Chicago has put together. And they are supposed to be here, I think.
Yeah,
right?
he said he was 10 minutes away. He had it down for 10 o'clock.
Oh.
I think there must have been
Oh,
a difference in time
a
zone
time zone issue.
issue.
Yes, okay.
Well, I mean, Marlo, we we do this all the time in public policy work as opposed to investment work. We adopt policies based upon theories, uh, political perspectives. Here, and that's why we conducted this report. Is as best we can tell, if that money is reinvested in Utah, it generates a considerably greater benefit based upon the report than than just simply measuring the yield of an investment in the PTIF.
Yep.
And I think that this report is drafted. It, I don't understand why we're trying to minimize that, to say that there was no benefit unless we could. Why wouldn't you say there's a significant benefit if we can assure? I'm just troubled by the way this report is trying to defend the status quo, is what it's doing. It's saying that status quo is the preferred mechanism unless we can do all this detailed work to track all these deposits and where they're lent and who's hired and where they're paying taxes. Unless we can track all that, there's no benefit. That's unacceptable to me. That's
and I think it'll be helpful once they're here. We can talk through that more, because I think there's definitely a benefit like what you were talking about. And in fact, this is why I'm working on the national task force that we are, and looking at how do we help community banks because of the positive benefit, right, to the economy. The issue is, how do we do this in a way that actually shows that what we are driving for happens? And so
nine times out of 10, Marco, I guess what I'm saying, when you put a deposit in the Bank of Utah or Central Bank or Rusty, pick a credit union, Utah Community Credit Union. 99 times out of 100, I mean, if not 100 times out of 100, that money is going to be lent in Utah. These banks only operate in Utah. And those loans are going to be deployed in Utah. And to the extent that they build a business, they're going to result in people being hired in Utah. Everything in that report that drives that multiplier is going to be accomplished, and you're going to get that benefit. And to not assume that, to assume that's not going to happen unless we can track it, is kind of preposterous to me, that we would take that approach, that until we can track it and prove it, we're going to assume that benefit isn't there. That's the way that this report is written, and it's troubling.
Well,
I would echo the same thing as Howard, even more so from the credit union perspective of staying in Utah, even to a higher degree. So I would agree with Howard.
Yeah. Well, and I think the key is there a way to do this where we can, and I think we in Utah have the opportunity to do this because of how we are situated. Is there a way that we can track the benefit and prove this out? Because that would be a first across this country, and it could have major positive impacts. So I don't disagree with you. I think the question is, to what extent can we track that and do that efficiently?
Well, I mean,
you could. What is the policy going to look like if that's going to happen? Are we going to have? We're going to require a certain amount that has to be invested of reserve balances in Utah-based institutions, and one of the things the treasurer's office has to do is to maximize return, right, for for those who are depositing in the PTIF accounts, and so.
Well, but this would be
No,
separate
it's,
from the
we're not
PTIF,
talking,
right?
yeah.
I know, yeah, and so what I'm saying is that, you know, if we've got, you know, public entities, municipalities, districts, whatever, that are using the private sector investment funds to help maximize their return on funds that they haven't invested in the PTIF, if we're gonna say, hey, those ones have to be invested in Utah-based institutions, I think that, you know, there's a lot of work, this is my assumption, a lot of work to be done to figure out, well, what does that look like? How much are you requiring all of it to be invested in Utah-based institutions? And how are you going to track performance and what it, you know, if there's an institution who has invested in a private sector investment firm and they're getting this, you know, rate of return, what if it's lower? That portion has to be invested in Utah-based institutions. I guess what I'm saying, I don't disagree with Howard. I think that if we're gonna make policy that says you have to invest so much into Utah-based institutions, I do think there is some work to be done on figuring out.
I wouldn't focus on institutions, and I don't think it's about tracking the in return rate. It's simply reinvesting the money in Utah is the requirement. And knowing that this report basically says is to the extent this money is reinvested in Utah, it's a better deal for Utah than it is even at 5% or 5.25 or 5, whatever the yield is in a specific investment out of the state. And I think the report clearly shows that theoretically. And so the question is what's practically doable? I think that's what senators and representatives have to come to grips with, is how do we practically get these entities reinvesting this money in the state.
Well, and that's where I would say we have got to have better information to track what the impact is, and because policy is going to have long-term ramifications, and we've got to make sure that we get it right. I'm very concerned that if we act prematurely based on the theory that this is going to happen, that we will not get to the end point that we need to, which is to say, here is how this works, and here are the requirements of the institution, that we've thought through the pieces that we need to incentivize the right behavior, and not just do as some states have done, which is to mandate a certain level of assets that are just placed with the local financial institutions and assume that they're going to be placing that money on loan, because there's lots of things that can happen. Yes, Senator Stratton.
Thank you. Great discussion. Appreciate the input. Here's a couple thoughts. I don't think we're in a position the legislature is going to mandate anything. It's to give options and give wisdom. I can think of cities in rural Utah that have some resources and they're not seeing the investment that we want to give an opportunity for them to self-direct and encourage. I don't think it's even an issue of mandate, because it should be so attractive that you want to do it.
Yes.
So that's the spirit of it. So we're not gonna sit up here on the hill and direct it. That's not. People need to have their choice and their accountability. The concern that I have, a couple of things for a legislator reading this report. Let me give some input. I think for the discussion, I think it'd be nice to see in effect what there is a real opportunity here if we can work through these issues. And these are the issues. The better. I don't see that. I see that, I think this is more and I hope this is a draft, obviously.
Oh, it's very much a draft.
So
Yes.
let's just go on page 1, key findings. Deposits and investments have increased across all public sectors. Deposits and investments held by Utah's public entities grew by 75.4% in nominal terms and 39.5% in real inflation terms. That's nice, but that's real not helpful information. Let me tell you how I'd like to see this stated, and this would be the case throughout the report.
Yep.
Deposits and investments by held in Utah entities grew by this amount of the dollar amount, which is a 74% increase. The percentage is nice, but we need to have dollars and cents. And we were saying, and the inflation adjusted is great too, but we need the real dollars and inflation. We need, it almost seems like we're trying to hide something here. It's coming across that way. Let's get dollars and cents, because that's what we deal with. The legislators and appropriations, they deal with dollars and cents. They deal with the $31 billion budget, and how does this compare to that, and what are the opportunities? The other thing that I think I would offer, so I'd folder two things. First of all, the placing anywhere there's a percentage, put a dollar as well with it.
Yeah.
Okay, that we need to have that, so we can put it in real terms and see what's happened. On the executive summary, I think that's fine. One point is the notion of, I would like to have included in the executive summary how we really feel about the opportunity to do the fractional benefit of investing in Utah there. It's very, very clear in this executive summary, especially in that third paragraph. Therefore, any discussion of utilizing the PTIF to achieve goals that do not benefit all investors in the fund is a non-starter. I don't think that was ever the intent.
Yeah, that's good. That's good.
You know, and I fine, leave it there. If you want to have that, if you want to leave that statement there, that's fine to make it clear. Hey, we're not talking about PTIF. We're talking about other opportunities. And then I think we need a dollar amount on what those opportunities would be. We have a PTIF amount. I've read through this and I can't find anywhere in here with my brief readings what PTIF is today, or as of the report, in dollars and cents. I can see percentages, but I can't see dollars and cents. I did see a graph on maybe on 15 and 16 in that area, but basically, so let's keep it up front and put the amounts in. And I think we need to make clear that we recognize the fiduciary duty, we recognize the PTIF and the sacred nature. I don't know if that's the right word, but that's off. But what is available and what can be there and macroly, and how can that benefit? And let's state what it is. I mean, we have a tremendous brain trust here. If there's some positive, like there's good credit unions and bankers, then if there's some positive things here, by God, let's say it. We're not going to mandate it, but let's recognize there's some benefit here and recognize the potential benefit. That's my impression. That's my impression.
No, that's great, and that's really helpful.
So those would be 4 things.
Okay.
The money by the money by wherever there's a percentage.
Yep.
Put a dollar amount. Second would the second is in the executive summary, include the positives. That's what we're doing, but protect and maintain the PTIF. Third is let's be sure that we're not, stating we're not recommending any mandating, but let's talk about what that fourth, let's talk about what that pool of potential resources would be and the positive nature that could turn into. That's my input. Thank you.
Yeah, no, thank you very much.
Hopefully that's helpful.
No, that's very helpful. And I think part of the caution on my end is just knowing the sensitivity around those entities that are invested in the PTIF and past efforts that have been made, right? And so
let's magnify that. Let's also recognize it's not all there.
No, exactly. And I think what we're saying is that this is not impacting the PTIF. This is separate this is a decision to be made by each entity, right, that has these reserves. Here is, you know, a potential option.
I see Beaver City or, or county or
Yeah.
Garfield County. Let's give them information and create.
Exactly.
Here.
Yeah.
You've got to protect this, but there's an opportunity here.
Yeah.
And I think what we need to do, we need to put some parameters together to do a pilot program. Let's not jump in this with both feet into the.
Right.
Let's see if it makes sense to have a pilot program. We could then begin to gather that up front, say, it'd be nice if we can track that, let's do it, and then we'll see if it's even trackable. But let's
Yeah.
scale it to the point that it's not gonna be a death bullet to us if we can't.
Yes.
But if we can't get all those parameters.
No, yeah, and
Does that make sense?
absolutely. In fact, I wanted to, Patrick and Mark are here now from, Tour Partners and wanted to invite you all to kind of talk about that concept and really kind of an update on the report that you guys have put together.
Yeah, first I want to apologize for being late. We had Texas does not work as well as Utah. So I had 3 flights canceled yesterday, so maybe we should follow Utah's lead. Senator, I want to say we do agree with you that being a steward to the fiduciary responsibility is a sacred responsibility. And I think, Patrick, we can talk very fundamentally about some of these findings in this report, but exactly what you said, we do believe is absolutely the case, that you can't do this, not trackable. We should do a pilot program. I think the most interesting finding for us, just coming at this completely cold, is that Utah is clearly probably the best run economic state in our republic. And I think you guys should be very proud of that. And you guys can do something that can change the course of the way a lot of states look at things. And you're right. Fundamentally, if fundamentally you can get money to some of these smaller lending institutions, they get in the community, it will work. But it has to be tracked. And I love the fact that you said, well, can things be tracked? Everything can be tracked, he says. I want to say thank you for Dan for spending time with Patrick and I on the phone recently, because he was very candid, he was direct about how he saw it. There was no hyperbole in it. We just really appreciate the time that he gave us. And what he basically shared with us was like, look, the state, the banks that need this could potentially use it, and they're not going to take it unless they can use it. So we like that thought, but it has to be tracked. I like what my long lost cousin, Mr. Headley, said the last time we were here, that if the banks don't take the money, if they take money, don't use it, they should probably pay a penalty. So we have submitted our final report. Again, sorry for being late. We got our times a little messed up, but I agree with the 4 principles that you said. As one, we do need to put this in dollar amount so you know exactly the economic impact. There's nothing hidden. It's very clear. It's concise. It's transparent. This is what's going to happen. I agree with you. There should not be a mandate. That it should be a pilot program. And then again, we are happy to do as much work as possible to show you that if properly implemented, there will be a proof of financial benefit.
And I would say one of the things that's echo what he just said is, I don't think we need to get too granular about doing anything inside these banks that they don't want to report to us. So we're not gonna be able to track specifically if they lend money in Utah County or they lend money across the Wyoming border or the Idaho border. What we would say is, given that a lot of these banks, 80% of their loan exposure is already in Utah, if they loan an additional $30 million, we're gonna assume 24 million of that's in Utah. And sometimes they'll be lending money right across the border. Sometimes we require larger loan, but then they'll be also inbound from those states based on wealth creation. So if we just take, really it's the loan growth from an existing baseline, that's something easy to report. And we're not gonna mandate anything about categories. We don't care if they make consumer loans or home loans or commercial real estate or auto. It doesn't matter to us. What matters is that it puts some of that money lent by the state of Utah back into the local economy.
Yeah.
Mark, would you mind sending the report not in OneDrive? I can't access
yes.
it. It's not letting me open it.
My bad.
So if you'll send us an attachment, I'll forward that to the group.
Yeah, that would be helpful, because I do think, having read a little bit earlier version of that report this week, that it does a good job of outlining what a pilot would look like, and for me, that is the next best step, I think, in this process. I think it'll really get the information that we need, I think, to drive that. that conversation,
I'm
so.
comfortable, Treasurer, that we can do that without creating any uncertainty or concern about the PTIF and there's a balance there that we need to strike. I hear
Yeah.
what you're saying, and it's very clear, but.
Yeah, I think what we have to do is take state money and put it towards the pilot and then track that. So it would be separate from the PTIF. It's money that
What do
the state benefits, right? Then
Do we have an amount that would, the pool? That would be, is we talking the reserves, the
yeah, it'd be the
1.23 billion in reserves or rainy day funds?
Oh.
What are you talking about?
yeah, I think that's the question that we would need to discuss.
Where is that?
Well, the pool right now is, so with the housing program, we talked to the Department of Transportation.
We took some of their, yes.
Right, so we just have to find an entity where it makes sense. We have plenty of money there at the state. I think there's about 14 billion state assets that are invested in the PTIF. So, the size that I saw in the report, I don't know if it's changed at all, but 50 to 150 million, something like that, to, as kind of a test run.
So Marlo, you're suggesting that in the
Sorry,
budget,
Val? Yeah.
you're suggesting in the budget, we would have to literally appropriate money for the pilot.
No,
No,
it wouldn't be appropriation. It would be carving out money that's invested in the PTIF and then putting it on deposit with financial institutions as they have projects that can be lent on.
So the only fiscal impact would be the potential loss of return. So the difference between the return on the deposit versus what would have been earned in the PTIF, assuming that there's going to be a greater economic return, so that we can prove that.
Yeah.
But whoever we deposit the money with, why wouldn't they have to give us a return on that money?
They would. The issue is typically when you're putting money on deposit, it's going to be a little bit lower than the interest rate that you would get in the PTIF. So it's that differential.
Depending upon which vehicle you use to put that money there.
Yeah. So it would most likely be a CD of some kind of a CD, I'm guessing, but I guess that remains to be kind of figured out. Rusty.
Yeah, thanks. I'll make some edits on the draft and send in. I just wanted to quickly echo some of what Senator Stratton said. On this report, I'm not comfortable with the wording of bullet 5 in the key findings, where we say local economic benefits from increased public deposits and local community banks remain unproven, but possible. Maybe it's just wordsmithing, but I think we need to change that to a far more positive statement, given the report that we've got and the discussions we've had of, as the one example, 24 million out of 30 million at a given bank or credit union would be in Utah. I think we can word this far better. This seems to me to say, yeah, this likely won't work, type of thing, when I think we all feel like this would work. So I think other than that, I'll have some other suggestions, but I just wanted to get that off my chest that, yeah, I'm not comfortable with that bullet 5 way it's worded.
No, that's great. Thank you. Yeah. And this is very much a draft. So, and we'll share the TUR partners report as well.
I am sharing that actually right now.
Oh, good. Okay.
Can I ask the tour guys a couple questions based upon what they just said? Is that okay?
Yeah.
So, I mean, if I understand the report correctly, what Rusty just said, if money is invested locally through a depository institution, and if it's certain things happen that we want to measure, that we want to track, it seems to me the report is saying that the benefit to the state of Utah, the economy of the state of Utah, is significantly greater than if it's just simply invested as it's currently being invested. Is that, do you agree with, is that what the report is saying?
That's a question for you guys. So they have their report. This is, so you, and I don't think anybody has seen their report yet.
Yeah,
Unless
but I mean,
you put your
there's
email
a
right
question
now.
of
Yeah,
there's
so-
a question of friction, right? There's a question of friction, but there's the initial model. If we manage for friction, assuming we manage the there is no friction. The benefit to the state is significant. Am I wrong?
I would say the benefit could potentially be incremental. I mean, significance a relative term because, I mean, obviously you put all this money in NVIDIA 5 years ago, you'd have a significant return, but that's not a
Okay.
quality.
Okay. Well, then just
So how we would define significant, yeah, that's kind of a wordplay there, but yes.
what's the number? What's the number? And then we can all decide if that's significant.
Well, I like what the senator suggested earlier. We'd like to go back.
Yeah, the issue is all the numbers are somewhat theoretical because the study's never been done in any state, and it's probably the reason states haven't gone forward is this is theoretical economic modeling and qualitative information. In talking to other states that have done similar things, they haven't seen the benefit because it may be there, but they haven't been able to track it. States like Indiana, they put a lot of money at the local banks, but they didn't actually track whether or not the money grew their lending base, right? So that was something that why we recommended ultimately doing some sort of pilot with all of the banks that are already qualified that would opt into this program. And we don't want to make any reporting onerous or something they have to add in addition.
Why? Okay, Mike, that's a question. Why would we do that? Is it significant? Are we doing, is there, why would we do this?
Well, it could, because if they do lend that money back into the economy based on the potential tax revenue generated to the state, it'd be far in excess of the returns just, in the money market or commercial paper
Okay.
market.
Thank you.
Yeah,
All right. So
Again, there's
it
a lot
would
of
be
variables there. Go ahead.
right. Okay, I get that. Lots of variables to manage. But if we manage all those variables, we're doing that because it's a potentially significant, however you want to define that, benefit to the state. I'll use whatever words you want to use, but I mean the numbers were higher if we met. So that question I have on that is, then what are you suggesting we need to track and manage?
Yeah, and I think if you pull up their report that Brittany just sent, you should all have it in your email now. Is there a page number where because I think you've outlined it pretty well.
Pilot 6 and probably page 6 and 7.
Page 6 and 7 on their report.
Yeah, Howard, and there's also it thrives in a small town. Of course, there's ancillary benefits to the community, to families, et cetera, et cetera. That's in an economic report. That's almost impossible, if not solely impossible to quantify. So, but that could be a potential economic benefit. And again, that's if the business is successful, if it maintains all of its growth propositions, et cetera, and the bankers. Again, it's a lot of ifs and hypothetical, but yes, there is significant contributions. When we look at the delta between the public markets and what they could get, changing target, as we discussed last time. So, if they go into a small, it could improve upon the 120 basis point spread that exists right now. I don't know how we would define significant. Our markets are all over the map right now. So you see highs and lows every day. So how we would define significance around current public market sentiment is pretty challenging to say.
Okay, forget the word significant, but I mean, is it a reason why the senator and the representative, why we're even spending this time? I guess, I think it is. I think your report says that it's worth us taking our time to look at this, whether you consider that to be significant and comparative with, the returns on Nvidia stock or something. I could, but the point of it is that there's a huge benefit to our communities, our economy, people in Utah of investing this money locally. So then we have to decide, okay, what is it? What drives that? What do we have to measure? Okay, if we give money, put it in a bank, does that bank, okay, first thing, it needs to be lent to an entity, a person, a company in Utah. That's relatively easy to kind of track, as you've mentioned. We can look at net loan growth and things like that. But as you get further and further away from that, that gets harder to track. And that's why no one's ever done it.
I think on page 7, we talk about just quarterly metrics required. I think if those hurdles can be met, we could quantify it. And that is, it's pretty simple. It's loan to deposit ratio relative to pre-programming baseline, loan to assets ratio relative to pre-programming baseline, and total loan growth, absolute dollars deployed, to the senator's point. That if we could prove absolute dollars deployed in return to the communities, and Howard, you are correct, that if you lend in the communities and they thrive in communities, there is ancillary benefits that we would consider significant to that community. It's just, again, sometimes it's a little challenging to really quantify some of that, and no programs have ever been able to follow that dollar all the way through. But obviously, small businesses thriving in communities is a great significant benefit to the community.
Yeah.
I mean, 90+% of the tax revenue in the state of Utah is from small businesses. Am I wrong about that fact, Senator? I think that's correct.
Yeah. So in these quarterly metrics, these are reported now anyway, right? I mean, this is call report data, right?
Yeah. What we would have to establish a baseline base right now. So this would be what we would want to do is the people that opted into this program. So based on the institution sizes above, they would just report this separately to an independent body or to a study that, because what we're trying to track is the specific banks here versus the banks that the other banks that aren't that are just growing on a normal baseline. So if 20 banks opted in and 20 banks opted out, that would be our control. And then we would know at the end of that year, well, these 20 banks actually grew significantly in their loan book because they had an extra 30 million each from various state entities. They grew their loan book more significantly than these other banks, and that proves out then the econometric benefit.
Is there a reason we picked 50 to 100 million, 150 million?
I think it was just based on the qualified institutions and their sizes and indicative, minimums, but we could play with that number. That's more for people if this room is smarter than me to decide. But it was looking at what banks would actually opt into the program theoretically. You guys would have probably more information for us, Rusty and Howard, than we would. If there's X amount of banks that would opt in, what's the optimal sizing? Does that make sense?
Yeah, it does. You ask Howard, they have all the money. Sorry. Had to say it, Howard.
I would eventually be interested to get the chief examiner's take on this about what he thinks that size, because he's much more intimately familiar with a lot of the smaller banks here in Utah. But I would say, guys, you guys did a great job because your banking industry here in Utah is the envy of most other republics in this country. That's for certain. You guys have a thriving, successful, multi-tiered banking system here that is the envy of most states.
I wouldn't have a policy position on the size, but I would just say anecdotally, banks in Utah they wouldn't opt into the program unless generally they were deposit constrained and had strong loan demand. So banks don't want to take excess deposits just to hold them. Like even if they could generate a small marginal, yield, the cost in terms of the capital they have to hold against those is much larger. So if they can't lend, they're not going to want to opt in. So,
yeah, well said, especially credit unions can't raise capital. So yeah, if we can't lend it out, it doesn't do us any good.
Yeah.
Yeah. we are just trying to help. And I think that what the report clearly shows that is when you deploy these funds through banks, credit unions, local depositories, the return is significant. I mean, the interesting thing is, I think the numbers that I saw in the previous report, and I'm looking at this report, mostly is like talking about tax revenues, like quantifiable things you can track, but it's not even talking about the benefits to, you know, individuals. And I mean, to the extent that income tax, they may make more income and they pay more income tax, but the benefit to these Utahns that are getting more income. And the other issue is that to the extent that they pay more income tax, so if the city takes their reserves and puts it in a local bank and it yields jobs that create income to the state, that doesn't benefit the city, but it does benefit the state and our schools. So that Senator Stratton and Representative Peterson, I mean, that is why the legislature needs to act on this, and maybe even in the form of a mandate, because what we're talking about here is a bigger picture. It may also generate more sales tax, which might benefit the city specifically, and they would say, okay, well, that's a good thing. But we're talking about the overall benefit to the state. And if you're just looking at, I can put the money in the PTIF and I get 5%, or I can put the money in a bank and get 2.5%, and maybe some additional sales tax revenue down the road, it's probably never going to happen without some kind of direction from the legislature saying it's in the best interest of the state to have these taxpayer monies deployed in the state. And that's what I think we're getting at here. If we have to do a study in the meantime, I'm open to that. But I don't think anybody's questioning that effectively deploying these funds in Utah is a much bigger benefit to Utah than really, Marlo doing his job really well, investing this money in the PTIF around the world and yielding 5%. That's great. He's doing an amazing job, but the potential return of, what we're talking about is much, much better to the state, much bigger, significant even, if you dare use that word.
Yeah,
I agree with you, Howard, but I think we have to have, prior to that, we've got to have a pilot program and some data, and a pattern established. Don't you think that that's important? I think I heard you say that.
Well, I think the only data we're going to see, and I don't disagree, Senator. I'm just kind of predicting what you're going to see is banks will take these deposits, they'll make loans. We'll track the net growth in loans, and we'll say this worked really well. And to the extent that banks take the deposits, the real key for me is doing it in a way where banks want to participate. And that's because that was the problem we had last year with the program we set up, is it just didn't make sense.
yeah. So I guess what I'll suggest at this point is that folks read through the TUR Partners report. There's a lot of great information in there, and then let's get feedback on the proposed pilot program. Love your feedback on that, Howard, and I think Rusty had to jump for a few minutes, but
what are we? Can you just tell me what? I haven't read it. What else are you talking about tracking in order to have a successful pilot?
Just have it there.
It's really 1 year, Howard, where we first have to figure out the scale parameters, how that would fit in with the qualified institution list already in place. And then we were looking at loan to deposits, loan to assets, total loan growth for those banks that take the money. And then we're just going to compare that against, so we're not going to try to track it down to where they made the loan, what type of loan, it's the growth in their loan book. And then you are correct, the money that the sort of potential tax revenue doesn't take into account a cascade of other effects, including wealth effects. But this was more about actual dollars back to various state entities. Those are that's a blend of state and local tax effect. So there is some sales, there's other property taxes, so it's from a tax policy institute. So we aren't going to, I think at the end of the study, you'd be able to look at maybe other wealth effects, or we'd be able to compare it at that point. But the base on the growth in the loan book compared to the control group of the banks that aren't going to take this money will have a pretty interesting quantitative read at the end of the year that no one's ever had before, including, and this would affect, bankers in all their states, because they could make the same case then.
Yeah, I think nobody knows their local community better than their local banker. At least that should be the case. And again, I appreciate the time that the chief examiner said, I think there's, and I'm sad that Rusty had to jump off, but I think some of these credit unions and also some of these local banks, they love to prove the merit of the value propositions that exist within their community. So they know the community better than any of us. And you're right, if they could show that they could improve that output in their community, I think they'd like to do it. I said that right? Is that right?
Yeah, I think as far as the pilot program, kind of seeing what banks did with incremental deposits, to me is kind of the easier part. I think that can kind of be borne out in their call report data and information we already have. To me, I guess the part I'm not an economist, but if we're looking at like number 5 on the recommendations, it's number 2, thinking about whether those loans are associated with observable economic benefit. The theory all makes sense to me, but I guess the question I have is how would a pilot program sort of demonstrate that? Like, I think I don't disagree, the benefits are substantial, and I think anecdotally that all rings true to me, but in terms of designing a pilot program, I think that's an important question. And I think Brent's from Tur Partners may have some insights there, but I think that's the trickier piece to demonstrate in a pilot program. So we need to think about that a little bit.
Yeah. Okay. Representative Peterson had to jump, so. Yeah, so I think it'll be important for folks to digest the Tur Partners report, and then we can have another conversation around that. But I think it does a nice job of outlining a potential pilot program, and maybe there's some adjustments we make around the margins on that to figure out how to make it more effective. But I think it's a great starting point. So,
and Senator, we appreciate your very practical 4 bullet points there. So we'll take that into consideration, because that's actual practical application of what can be done here. So
and I think that was specific to the report that we wrote, so not yours.
Yeah. So
yeah.
But we need.
Yeah, we bring them together.
Yeah, we'll bring them together.
Report there, I've seen a lot more number, I think.
Yeah, I would just reinforce what Rusty had said before he left. That I don't read your report, Brittany, to say that. I think it needs to capture that the return is significant if these things can be managed. And so we're going to do a pilot to see if we can manage those things. To say that it's not significant unless it's just a different way of saying it. And
we'll work on. We'll rework that.
Yeah.
Because again, to what they just said, we're only measuring the tax return, but there's all these other benefits that I think legislators would take into consideration when forming a policy.
Yeah. Okay, let's see, where are we at here? All right, yeah, I think there's a great discussion on the study and appreciate everybody's input. I wonder if it would make sense at this point for us to go back and rework the report. Give based on the feedback that we've gotten today. And then send out another one.
Resend it out.
Yeah.
I think that I can easily get the edits that we've discussed today into the report today.
Okay.
And then
send it
and
out.
then send it out.
Yeah.
Ideally by the end of the day.
Yeah. Okay.
So that would be helpful, so we would hold off on.
Hold off on yeah.
their feedback until I send the updated
yeah.
report based on the feedback that we've got today.
Yeah. Yeah, I think that'll be helpful.
And maybe we give you until Wednesday, midday Wednesday, to send any additional feedback.
I didn't say that.
About Thursday at noon.
Yeah, no, not on Thanksgiving.
We will determine once we have sent out how about when we send out the report, we will give a deadline for feedback. How's that?
Sooner the better, but
yes,
we'll give a deadline.
Yes. Auditor Cannon.
Oh, I'm just curious, how firm are we on that November 30th?
It's statutory.
We go to jail if we don't do it.
You're not hurt?
No, we're not. No, nobody take any deadline that was been thrown out. We have not set a deadline. I just want to clarify that will come in the email.
You set a deadline for Tuesday, but
Yeah, okay, I know, but I've adjusted that and said, I am taking the commitment off until we have the report done, and we'll send it out. And in that email, you will see a deadline that we're proposing.
I would suggest that oftentimes if we need a bit more time, we could give an update for tentative report by the 30th, and then we follow up certainly before we get in the holidays.
Yeah.
I think that's a good question, but there's ways to I think meet the statutory spirit of what was sent as the drafter of legislation on state. But let's get it done as soon as we can.
Okay. We don't need to ruin Thanksgiving.
I would rather that we take substantial feedback and then just if we need to discuss it again for final recommendations, I would rather the report be accurate and truly reflect all of the input of the group other than for.
Yeah.
Correct. That's
Yeah.
the spirit of it. Even if we want to get on a phone call again, that might be helpful. We could gather in person.
Right.
We are limited, I think, but maybe did we put a limit on how many times we could meet?
No, it's just the deadline that's looming.
And I thank you for that.
So, yeah, no, I appreciate the perspective on that. So.
Where the 30th is a Sunday, if we could move that deadline even to the 1st and meet one more time on the 1st to hear feedback, even if it's a phone meeting on the 1st, and then finalize it.
Yeah.
Would that be an appropriate?
You think that would work?
Yeah, finalize it, finalize, I say by December 15th, I'm comfortable, just cover ourselves and issue a quick letter that it's, here's our report that we're making good progress, and we'll have the final report. Did we say final report or just a report?
I don't know. I'm not sure.
It says submit a report with recommendations by November 30th, I think is what the bill says.
Okay.
So we're fine with just make sure I'm understanding clearly, a letter to the Executive Appropriations Committee saying that we're still working on the final report.
With them that we recognize this, we're excited to present this wonderful report.
Yeah, okay.
I think you add to the positive that your state is in a really healthy situation. The macro trends of the US are sort of interesting. Some states are in a really significant problem because this technology revolution is going to change their workforce dramatically. You guys have a great mix to where you're probably going to be one of the most successful states because you have manufacturing, you have technology, you have significant banking. You could be the envy of the republic. I mean, there are some states that are in a really challenging situation going forward. And so what you guys could set is a very unique precedent in how you impact local communities with quality lending to small businesses that serve their communities. And I just have what we want to say. as we've dug into this, we're like, wow, I hope you guys maybe take a couple outliers into your state. I have 6 kids, so I probably fit in perfectly there. So, I love that. And Patrick will come and he'll make 12, so we'll just do it. We're all,
We love the, let's add this way.
That's
right. That's right.
We're all, and again, I think my middle name's Headley, so I think Howard and I are somehow indirectly related, and we are, somehow we are, he's just more handsome than I am, so there you go. He got the better half of the genes than I did.
Well, it's a small picture of him there.
It is, yeah, it's
That's right, that's right.
I've got the filtering, all that filtering on is all, but I don't mean to belabor it, but to what you're saying about economics, I mean, we do have a great situation, and I created a video to talk about this. This truly is, you know, a $30 billion opportunity when you understand what what banks and credit unions, what depository institutions do. We create money. And so if you put that money into a bank and we lend it, you're basically doubling that money. And because of course the city, the town, the school district, the state, it doesn't lose access to that deposit. Yet if we lend that deposit, someone else gets that money. You get, and it's really, it's a powerful concept. We have this opportunity. We have the banking system in Utah to do it, and the economy to do it, and that's why this is really an important discussion. So, you know, I appreciate everybody's time and focusing in on it.
Yeah, thank you. Sorry, the power just went out briefly here. But
We're at the point where you're solving all the world's problems, Howard. That's when it shut off, right? All the world's problems are being solved in the power.
And the power is one thing, but we hear you through the laptop. So, all right. Well, thank you. I think this has been a fantastic discussion. We've got some great direction on the report. We'll work on that. We'll send it out. Yes, Senator.
Let me again express appreciation for this. It's good to have, I like to see some healthy tension. The worst thing we can do is sit around and agree with each other. Now we want to get there.
Yeah.
But healthy tension, pushback is that's a good, robust indication of good health.
Yeah. No, thank you.
Pruning a tree strengthens that tree and promotes growth. And so I appreciate the discussion and I stand in great respect and all with this great trust. And so I'm grateful for all that we've done, and let's elevate this and get it across the finish line and take next steps. So
great.
So much.
No, thank you. That's a great summary. So and thank you to our partners for all the work you guys have done. And
sorry, I jumped off really briefly. Did we decide we have past the November 30th to make some edits?
Yes.
Yes, we are going to send a letter to the Executive Appropriations Committee saying that we've made significant progress on the report, but we'll send the final report.
They may want to check. They may have a meeting that they want to have their scheduling in December.
Okay,
that's true.
Yeah, I'll check.
Have it the 10th or let's communicate.
That's a great idea.
Don't we have an interim again to the 9th, 8th and 9th, somewhere along there, if we finalize it before
then. Yeah.
I think that's about
we don't
I'll
have
have
it
to look
from
at
again. We could end up with half a dozen special sessions between now.
Hopefully it's not
some other areas of concern in the state. We don't, but there are meetings in December, to your point.
Yeah, I think there's some meetings in December. If we check on what their schedule is, let's see.
EAC is the 9th.
Tuesday, December 9th.
Okay.
So if we could finalize by that.
Yeah.
I think that would be perfect.
Okay.
And right ahead of that, that way if they choose to discuss it. So what's the Friday before that? Be the 5th. So maybe if we try to get it finalized by December.
So if we have all comments back in by the 1st and then meet again on, the 5th.
Well, if we want to finalize it, we'd want to have you said comments in by the first?
by the 1st of December, and then meet again on the 5th to finalize before their meeting on the.
Or that sometime that week. Marlo's going to be at a board meeting the 5th, the 4th and 5th, so we'd need to do our meeting the 1st, 2nd, or 3rd.
Yeah, the 3rd works for me. I guess I shouldn't speak for the group, but.
Okay, guess we'll coordinate with folks. And
Yeah, generally speaking, I don't know if you all have your calendars out on the 3rd. Is there general availability that day? I think from our end, we don't have a whole lot going on the 3rd, so we have some flexibility on our end. 3rd not work for anybody?
Okay.
I'm more free in the afternoon.
Okay. Great. So December 3rd in the afternoon. I take silence as a yes.
For those state calendars, I can compare.
Sounds good.
Okay, great. Okay, let's
And I will still shoot to take the edits that or the feedback that we've been given today and send out an updated report with that by the end of today. And then feedback by the 3rd or first meeting 3rd.
I won't be in person on
I think it would be easier for everyone for that final one if it is.
Yeah.
This is
Yeah.
meeting.
Yeah. Yeah, we'll do virtual on that one. Okay. And it's December 1st. Would be a deadline, obviously. Well, I still want to remain uncommitted on December 1st until I can think through, but because we want to get feedback in sooner if possible, right? So
If we get feedback by like midday December 1st, that should be enough time
You're
to
okay.
incorporate it by
okay,
December 3rd.
okay,
Then final tweaks before the 5th.
all right, let's do that.
I think that's feasible.
Okay. That's perfect. All right, thank you.
Thank you so much.
Yeah, I think, is there anything else that we need to discuss? Good
So we
point.
have it on the agenda. No.
Yeah, I think we covered it, so. All right, anybody have anything else? Any other business? If not, we're adjourned. Thank you.